Good morning. I'm Catherine Ross at TheStreet here with Jim Cramer. How are you, Jim?
Good morning, Catherine. How you been?
Been good.
Very good.
So I'm looking at the markets right now, and the S&P just went positive right before we
That's
started.
very significant. What's happening is that people realize the market's oversold. We absolutely had a ridiculous assault on the Cloud Kings yesterday. There were no buyers because, frankly, it was a very thin day. It was a holiday. We see buyers come in and start taking advantage of the cloud stocks that were down so much. We bought some Salesforce yesterday for Action Alert. And what I really like about this market is take a look at treasuries. Treasuries are doing nothing. There were people who just felt treasuries had to go to 3.5. I'm talking about the 10-year. If we hold here, we'll see a lot of stocks do better other than the banks, because the banks, of course, would like to have a little spread between what they're paying you in that CD and what we borrow at.
And oil's positive. What are your thoughts?
Well, I mean, look, we have a lot of oil in Action Alert, so obviously I want to see oil higher for that part of our portfolio. Schlumberger hasn't moved yet if you want to have a bargain. That's because people have not up their drilling budgets yet for 2019. They will. But you know what? I look at the airlines. And I look at, Matt Horween and I, my writing partner, going back and forth, and the transports are rolling over. And we don't want the transports to roll over. Now, Phil LeBeau, whom I absolutely love, on Squawk on the Street was telling me, please, Jim, don't fret too much about autos because consumer confidence is good and employment is good. I fret because PPG is telling me to fret because they make the finishings for a lot of the high model cars. So what's happened is that on the one hand, I've got Phil LeBeau who does the best empirical work. On the other hand, I have PPG that has an order book, and they're saying that Europe's slow, America's slow, China's slow. Now, it's entirely possible that PPG, which got dropped by Lowe's, is not a good indicator given the fact that they told you that there was they had to meet demand at 8 o'clock and then told you that demand had lessened at 4:49. I mean, come on, guys, they really screwed up. But I'm concerned. Call me concerned. I remain concerned about the market until Jerome Powell walks back those comments, which basically said full speed ahead regardless, and we can't have that.
PPG was also the subject of your Real Money column this morning.
Right.
And I'm wondering what made you want to write about it? What is it
because PPG under Charles Bunch was remarkable. Under Michael McGuire, under Michael McGuire, it's not doing well. And but PPG is three businesses that we have to follow. Aerospace, which they said is very, there's no let up in how strong aerospace is. Hence why we like Honeywell. And then he's got coatings for houses, and that's okay, which is interesting because that's a business that I think is slowing. And then we have auto, high finish auto. And high finish auto, there's a plant near me where I go to, in Mexico where we have a house, a big PPG plant. And, Mexican the car industry has exploded there. Hence one of the reasons why we had to revise NAFTA. And PPG, if they're slowing there, that's, you're talking about Toyota, you're talking about BMW, you're talking about Mercedes. Catherine, we can't have all these companies slow and not take notice because those cars are destined for America. So their order books are showing, listen, we don't need more. Phil talked about the cost of financing. Financing's going higher. So I am, call me a little more cautious than I'd like to be. I don't want to be this cautious, for heaven's sake. I've been bullish for ages. I'm just a little concerned.
I mean, in this market, it makes sense.
Well, what's the point of just being full speed ahead when we just had the Fed chief tell you something that sounded very much like Ben Bernanke in 2005? And I think that's a shame. He's got to walk it back. I think he will if we keep the pressure on.
Your Mad Dash segment this morning focused on Snapchat, and I'm curious with the Google news yesterday of the Google Plus being shut down. What's your thought on social?
I love the way Google Plus put a positive spin on it. Basically, hey, listen, it wasn't doing well anyway, so we should shut it. Look, hacks and breaches, one of the reasons why we changed our bullpen names to add a cybersecurity name, and we'll talk about that when we do our club call, is because while the hacks seem like mindless at this point, the fact that Google chose not to reveal it immediately was very target-like. Now, I'm talking against my book. This is an Action Alert name. But one of the things we do with the club is try to educate. And I can't just say, hey, listen, ignore it because the trust owns it. That's not the way things work in our world. We take very long-term positions, but we are and we don't want to trade. We don't want to churn. But we recognize that this was something that Alphabet did wrong, and we have to hold a candle to it because you immediately should recognize hacks and talk about them. That's the lesson of what we learned from Target versus Home Depot, where Frank Blake was like, boom, here's the thing. That's the way you do it. You need trust. Trust matters. Really hard to get. goes away in a second. Now, Facebook is holding here, in part, that's an actual name, in part because Moffett-Nathanson put out a piece saying Instagram is killing stories, is killing Snap. The Snap piece that Moffett-Nathanson did, and Nathanson does incredibly good work, really basically raised the question whether Snap can stay in business. That's a suboptimal situation.
And I want to talk to you about your Mad Money segment last night, which really focused on cannabis because cannabis is the topic of the week for us.
Well, that's why we're having Bruce Linton and we're having Bill Newlands at our conference this Saturday. That's my keynote luncheon. And what we're talking about with cannabis is twofold. Now, there was a Mr. Clown on Twitter saying that I am predicting a crash after Canada starts. Okay, here's what I'm predicting. A sell-off, but you should buy Canopy because Canopy has a $5 billion war chest. Now, if you go read the conference call with Canopy, what you would hear is Bruce Linton, and he'll reiterate this, I bet you, on our Saturday, on our teach-in, saying, listen, we are the number one. We don't even know the numbers 2, 3, and 4 are. And that's important. So let's get that on the record at our conference, at our teach-in. Pictures with me. You'll have a good time. You get to line up. We take pictures. It's fun. You can talk to me. And I just feel like, you know what? It's something I love to do because the people who come out are people who are cadre. I call them cadre. They are people who want to learn, and I feel like teaching. Wife doesn't want me to. Wife wants me to go home.
Well, you heard it here first. It sounds like you got to be here.
Yeah, I can't get the wife to go. I'm trying to get the daughter and the wife to go because I think it's
I would love to meet them.
Yeah, me too.
All right, I want to make a quick note that Google is Real Money's stock of the day. So we're going to have wall-to-wall coverage, as you love to say.
Yes, blanket, SWAT team.
Yep. All right, folks, I'm Catherine Ross with TheStreet here with Jim Cramer. That's a wrap for today. See you guys tomorrow.